Hey guys, welcome back to the Binance Minipod series where we summarize some of the latest pieces prepared by Binance Research. Binance Research is the market analysis and research arm of Binance. Find the latest reports and insights at research.binance.com. This is Brian from Binance Trading, and today we're going to be looking at our 2019 Q3 crypto correlations review. And basically, we're going to be trying to answer the question of, have crypto assets remained correlated throughout the third quarter of 2019? Going through some of the key takeaways of this report, we can see that unlike in Q1 and Q2, in Q3, Bitcoin dropped by nearly 30% as of the end of September, and other large market cap altcoins also dropped by 38% to 60%, which you can see in Table 1. So in Table 1, you can see that while Bitcoin dropped by nearly 30%, the other coins on the list actually dropped even further. And so this led to Bitcoin market cap dominance increasing, and dominance levels temporarily reached levels exceeding 70%. Bitcoin trading dominance also appears to be at a high, with more than 40% of trading activity on Binance being on BTC against stablecoin pairs. In comparison, BTC trading dominance was around 15 to 25% for the first half of 2019. Compared to the second quarter of 2019, in Q3, we actually saw top large cap assets displaying higher positive correlations, and this could be down to a number of factors, including proof of work assets tending to display a more substantial correlation with each other, the privacy effect, Dash, Zcoin, and Monero displayed higher correlations than with other crypto assets, programmable blockchains such as Neo, Ethereum, and EOS exhibiting on average higher correlations with each other than other non-programmable assets, and also the Binance effect. Assets listed on Binance displaying greater correlations than with crypto assets not listed on Binance. So, for example, Dogecoin or Dodge and Cosmos or Atom actually had increased correlation in Q3. Interestingly, Ethereum became the most correlated crypto asset in the ecosystem, which could lead Ethereum to become one of the principal benchmarks for the cryptocurrency industry. Moving on to chart 1, we can see that Bitcoin dominance increased from 50% in early January to actually over 70% in September before dropping back to around the 66 to 67% range. Bitcoin trading dominance on Binance was also much higher this quarter. As an example, in March, only 10% of the trading volume was against BTC as a base asset, but since then this ratio has kept increasing and reached new highs above 45 to 50%. In chart 3, we can see that Bitcoin trading dominance actually increased at a faster pace than the increase in Bitcoin market cap dominance, which could indicate an overall disinterest from market participants to altcoins. And so while Bitcoin did have a steep price drop this quarter, it was still in a sense a win for Bitcoin maximalists. In part 2 of our report, we do a correlation analysis of large cap assets, and in chart 4, we look at the correlations of USD daily returns of 30 large cap crypto assets between June 30th and September 30th. So looking at the chart, you'll see that correlations between all pairs are always positive, and correlations are also more significant among the largest crypto assets. As we did in our previous Q1 and Q2 reports, we look at several factors influencing correlations. For example, proof of work assets exhibited a larger correlation with each other, and Bitcoin, Litecoin, Ethereum, Bitcoin Cash, and Bitcoin SV displayed a high median above 0.75. Ethereum, however, is transitioning to a proof of stake in the near future, and so it remains to be seen whether this could impact the strength of its correlation with Bitcoin. Privacy coins such as Dash Zcoin, and Monero also displayed higher correlations than with other crypto assets. Programmable blockchains such as Neo, Ethereum, and EOS also exhibited on average higher correlations with each other than other non programmable assets. And as we mentioned earlier, the Binance effect. Assets listed on Binance displayed higher correlations than with crypto assets not listed on Binance. So, for example, Leo, Crypto.com, or CRO, and Huobi token were less correlated on average with other crypto assets. There are a few interesting correlations that we found in the chart. One is that Ethereum displayed a very high correlation with most of the crypto assets that we looked into, but actually surprisingly showed low correlation with Ethereum Classic with a correlation coefficient of 0.69. Huobi token had its highest correlation coefficient with BNB, which is fairly surprising since both are exchanges and, in a sense, naturally competitors. Ripple remains highly correlated with Stellar, which is in line with findings from our past report about cluster analysis. And among all the crypto assets that were investigated, most displayed their highest correlation coefficients with Ethereum. Only Decred or DRC exhibited higher correlation coefficient with Bitcoin. Comparing our Q2 study and our Q3 study, we can see that the average correlation between the different crypto assets actually increased from 0.54 in Q2 to 0.64 in Q3, indicating a higher correlation between the different crypto assets. Compared to Q1 and Q2, BNB displayed a much higher correlation in Q3 with other large cap assets. Cosmos or Atom and Chainlink also displayed sizable positive increase in correlation with most of the other large cap assets. Correlation of Dogecoin or Doge remained quite low with other crypto assets despite its Binance listing in July. However, compared to the past quarter, correlation did increase. Overall, in Q3, the average correlation between Bitcoin and other large cryptocurrencies remained in line, mainly in line with the previous quarter. But average correlation among large cryptocurrencies increased in Q3 with significant positive increase in correlations of BNB, Chainlink, and Bitcoin SV with other crypto assets. As with our previous two reports, we believe that factors such as proof of work consensus or the potential Binance effect remain some of the factors that could impact the strength of correlations. As we mentioned earlier, Ethereum had the highest median correlation with all other crypto assets, and so it will be interesting to see whether Ethereum will continue to become one of the benchmarks of the cryptocurrency industry. As with most things, and particularly in crypto, past results are not representative of the future. And so we're looking forward to seeing whether some of our findings in this report will repeat in the fourth quarter of 2019. So that's all for now, guys. We hope to see you again next time.